Hello everyone and welcome to another weekly market forecast video. So hopefully everybody's having a great weekend. So we have finished on Friday the US stock market and indices webinar for our members. For those who are not already part of our membership, you can find the link in the description if you are interested to join. We have shared a lot of important information as to what follows for the stock market and indices in general and the bigger picture heading into 2026. And we believe that is something that everyone should be aware of. And this is something that you can take as a guidance in towards also your personal life decisions, because it's something that affects the economy and financial markets in general. So let's start with this weekend's market forecast. So what we will expect entering this week and the new month of April is that the dollar is still within this move to the downside from the 13th of January. And we can see another move lower heading towards the 102.50, 102 area. Keep in mind, we will also have the US jobs data releases during this week, which they might be expected not very good. So this could also help with this move to the downside in terms of the dollar itself. So this is our bias, as we have been anyway. After this bounce, one more move to the downside we could expect. For the dollar yen, as we expected this move to the downside, we have explained about the bounces in between, but we are still looking for one more move to the downside, as we have been explaining, to at least retest these lows at the 147 area right here from March. This is what we are expecting, or ideally one more low might happen in the dollar yen. So overall, we are still biased to the downside from these highs in the dollar yen. For the euro, same idea with last week. We expected to see a pullback and then one more move to the upside. We're in the process of heading to this move to the upside. We can see the area of 111 as a possible target area. So one more high in the euro should be happening from the 13th of January, from the next week onwards. Also for the pound, we are expecting one more move higher from the 13th of January. So we are in the process of this small pullback. So we might have a little bit more downside in the beginning of the week, but the bigger move is to the upside, and probably the 132 area, it's a possible area that we might reach for the pound. So this is a move overall from the move that started from the beginning of the year, 13th of January, as we explained from months and weeks before. So for gold, obviously gold is a market that has been very easy for us during the last year or more. We have got another pullback that we expected after this move to the upside, with another short-term buying area. We have reached another new all-time high as expected. So from here onwards, we would not be really chasing the market higher. Our members, they knew about holding this long trade from the beginning of the year. So at the moment, buyers should be looking to secure these profits, because that was a massive move for us. So we are not going to be chasing the market higher, even though we can see more upside. Potentially we can keep going on and on a little bit more, but things are becoming riskier as the market reaches these levels right here. And we might get also sideways before one more push to the upside. So there is no real need for someone to chase this market higher. And also there is no need to gamble your money on the other side, because the market is clearly bullish. So for oil, as we expected, a double correction higher to the 70s. We have reached the $70 area exactly on the dot, and we are rejecting as expected. This is the next area that we expect a move to the downside. Ideally for us, this should be another move lower for oil. However, we would go with the highest probability, which is retest of March lows down here, with also a possibility of breaking this low. So we are biased for the downside for the upcoming week in oil, for at least the retest of these lows. Now for gas, we have explained last week that the market is cautiously moving towards these lows from the 3rd of April and this level from 18th of February, and we have explained that the market was not clear and it should have been avoided anyway from traders until the market really showed its cards and what it wanted to do next. So overall, what we can see is that the market now has created, let's say, a nice base over here, and we can expect to see a move to the upside finally to reach the $5.2 area overall. So as long as we are above these levels at the 3.8 area, gas should be able to extend higher for this $5 area. And for the S&P 500, we were looking for this buying area on the 13th of March, at this buying area that we indicated. We have got the first move to the upside. Now we have a pullback to retest the lows, and we are still biased to the upside for the new cycle to the upside that we are expecting. So we are bullish for the S&P 500. However, we might get some more volatility into the first few days of the week, but overall, we should be able to extend to the upside very soon for the next move from these levels down here. And lastly, for Bitcoin, we have also got a similar structure with the S&P 500. We have bounced and then we are pulling back as expected. This is what we call the accumulation area for Bitcoin, and we should be looking for a move to the upside to gradually start from the upcoming week onwards. So we are looking for a new cycle to the upside in Bitcoin. So this is what we have for this weekend's market forecast video. So hopefully you have got value out of it, and thank you for your time to watch the video. Of course, don't forget to support us at least by giving the video a like, because this way we can reach to more people, and we can provide our services to those who are seeking for true value. Once again, we keep saying this, but it's very important that in our membership service, we provide big in-depth analysis for all the markets, all the instruments, and most importantly, we explain why we see certain things. So it's not based on our opinion, it's based on professional data and the way that we know from our experience how to connect the dots and come up with the next cycle or path of any market. So this is where you will get most of the value, and this is where you will become a successful investor and trader only if you are willing to learn and open your eyes and brains and put down and think how we come up with these different forecasts that we do in our live sessions and webinars for our members. So we will also release soon another way you would be able to join the membership. Also, we will also put a minimum number of people that we will be accepting, because we want to keep this as a close community, something that I can manage with my time and make sure that everyone is successful in his own investing or trading journey. Because one thing for our service that stands out from the rest, we do not want to have any losers in our service like other services. We don't have conflicts of interest. We don't want you to go and lose your money in stupid things. So we are here to help you out as much as we can. So with that note, thank you for watching the video, and we'll see you in the next video very soon.